Welcome to Tradiers, the Trader's Edge. I am Jim Uriel. That's Bob Ichino. It is always kind of funny how we're in the waiting room and there's always something interesting we're talking about. And right when someone says something funny, boom, it cuts and goes to the show, and then we can't even continue because it's probably not suitable for air. How are you today, Bobby?
I'm good, man. How are you?
Good, good. The stock market didn't really go up or down. I was long the 80 calls. Is it 5080 or 5180? The ones that expired today. So I had to watch it all day long.
S&P, right?
The money. What was 5180 for the March contract, right?
Yeah. Well, if you're in the March contract, I'm looking at the June already.
And retail sales. What do you think?
You know, the Johnson Red Book numbers, which we used to look at really intently. Remember being on the floor and we'd all be getting ready for the Johnson Red Book numbers? They're turning up. Now, I am starting to look at them again, thanks to Mike Singleton from Invictus Research, who's been on this show and our other show, been on this show a couple of times. And he says he just likes the frequency of the data, and it's starting to turn up. So I think we might, maybe not yet, but we're due for a retail sales surprise to the upside. And you're seeing the same thing in credit card spending. It's kind of turning and ramping up again. So
I see the credit card. I'll look at more of the Red Book than I will the credit card, just because I don't think that people are borrowing money at 24% rates because they really feel like it. And delinquencies are going higher too. That's at least a reasonable question, right?
It is, because delinquencies are higher. They're not at a critically bad level, but they're moving higher.
Right.
So a lot of the times we're looking at the trajectory and the momentum of something more so.
Anissa.
How you doing, Anissa? More so than the actual figure that it's at. Like, for example, we just got the CPI numbers a couple days ago, right? And goods inflation lower again, down 1.7%. But that's off of a down 2.8, a down 3.3. So it's moving lower less aggressively. And then you compare and contrast that with just sort of the core CPI year over year, take it out, 6-month annualized, running at a 3.8% clip.
Yeah.
Up 4 consecutive months if you do the 6-month annualized calculation.
And government spending like drunken sailors.
Yeah. You look at the budget that, by the way, people forget Congress has the purse strings, right? I mean, the president presents a budget. And I don't know when that happened, because he's not the one who doles out the money. Or I think one day Congress just said, well, why don't you give us a budget then? You know, and then it just became a thing. So they could blame him or her. I guess we haven't had a her yet, but I'm not ruling it out. So from that perspective, you're looking at the spending, and the spending it's going to be down from last year, but it's going to be the highest level if you take COVID out. It's going to be the second highest level ever if this particular budget were to go through. And they're projecting higher tax returns, so they're projecting a lower deficit.
Yeah.
They're not going to get higher tax returns.
No, they're not going to get higher taxes.
Even if they raise taxes, it's going to go even lower.
It almost seems like sinister. I don't think it's garden variety incompetence. But what I want to break to is, in the waiting room, we have Path Trading Partners, technical analyst Mike Arnold. When Mike Arnold comes on the show, he makes me money. I love talking to some of the economists we talk about. I mean, we talk to high-end economists. But Mike Arnold actually draws out a blueprint, which I find very useful. So without further delay, let's bring in Mike Arnold, Chief Technical Strategist, Path Trading Partners. Michael, you didn't have to dress up for the show. We're not very formal.
You know, I have to correct my past mistakes. You know, I wore a tie-dye, but it wasn't a dead tie-dye. So.
Oh, yeah, you need a dead tie-dye to make me happy.
Does that like represent an album? What is that? It's a Lighthouse on Fire or something. I don't know.
It's not really representative of an album. It's just one of their, they're periodically release some new lines of shirts, and this was one from last fall.
Gotcha.
So this
is milking it.
Yeah. I was just in San Francisco and went to Haight-Ashbury, and my daughter and I bummed around there for like 4 hours. And most of my life, I've been very interested and kind of romantic about the hippie culture. I'm not any longer, by the way. I think the hippies all grew up to be like big government Democrats, which doesn't make a bit of sense to me. Hippies were supposed to grow up to be libertarians. Am I crazy or no?
No, I mean, they also grew up to run ice cream companies.
You know what's right on the corner of Haight and Ashbury?
What?
The Ben and Jerry's.
Yeah.
It's very funny because my daughter, like I said, you kind of get that because I'm sure Ben and Jerry don't have any idea where 99.9% of their stores are, but I'm sure they know that one right on the corner of Hayden
I'm
Ashburn.
in love with this term that's been gaining popularity. I never heard it until a couple of weeks ago when I was listening to a podcast on my bike ride, the luxury beliefs. It was Chris Williamson that explained it to me first on his podcast. And luxury beliefs are beliefs that like people who don't have to deal with the belief itself push. So something like, we should defund the police being pushed by a bunch of people in gated communities who have private security. That's a luxury belief, right? Ben and Jerry, the two owners of Ben and Jerry's, are two of the biggest pushers of luxury beliefs I've ever seen, because they push things that just doesn't affect them anymore.
Yeah.
Maybe it did at one point.
Oh yeah, I believe no doubt about it. They're insulated from the bad policy. Like Mark Benioff, Salesforce, literally at his conference call after earnings last time, he talked about how they might move out of San Francisco because San Francisco has become crime-ridden and full of homeless people. This is literally what he said. Mark Benioff, the same guy who's been crafting and involved with San Francisco politics for 25 or 30 years and has pushed it to where it is right now, is like, yeah, it's getting a little too crime-ridden here. There is nothing more hypocritical than that bullshit.
Totally agree.
Yeah. Michael, how are you?
Yes. I'm doing. Do you want to know what Ben and Jerry's? I have never tried the flavor Cherry Garcia.
Neither I. I don't eat ice cream. It's just
I'm a huge fan of cherries, so I do like that flavor, but I don't buy it anymore.
Good.
I've just never tried it.
Regular old New York cherry was a nice flavor when we were kids. I didn't mind that at all.
That's good stuff.
So I at some point in time, we have to look at copper. Copper made an enormous breakout today. And just 2 days ago, I was talking about on Twitter how that was my watch list. I thought the breakout was coming. And I'm very, very long it synthetically. But people want to look at stocks first, right? Don't you think? Anyone, Mike?
Oh, yeah. I mean, I definitely want to look at stocks. I want to talk to Bob about why he thinks the VIX is broken.
Let's talk about it.
Let's start with that, because that'll lead into stocks. I've got a VIX chart for you, and I posed a question to Mike. I don't remember if it was yesterday. I think it was yesterday. And for those of you that don't know, a lot of Mike's experience is in options. CBOE, he was one of the people who went over to Switzerland to help open their options exchange. That was Switzerland, right? Not Sweden.
Mm-hmm.
Yeah. So Mike's got a ton of options experience. And I said, I just think the VIX is broken. So we can get that chart up. I'll explain what I mean. The VIX itself, to me, obviously it's mean reverting, right? So when you talk about a mean reverting chart, it doesn't seem to price fear in. Max, can you put that up? Because it's hard for me to talk about it without seeing it. There it is. Sure. So it's almost like it doesn't mean revert in any way. It doesn't extend anymore. It doesn't show any fear. I have that red line along the bottom, right? And I'm looking at this, and I can even compress it a little bit more. Here, obviously, is like the meat of the pandemic, right? Where the VIX kind of just hovered. But when you look back, this line right here is about all you get the majority of the time. Now, the VIX itself doesn't seem to ever show fear unless there's an absolute freaking crisis, in which case the fear isn't necessarily warranted anymore because it's upon us. So I guess what I'm questioning is calling the VIX a fear gauge. Is that just a misrepresentation of what it is, or is the VIX itself broken?
Well, what's the VIX showing? It's showing, the implied volatility of OEX, essentially. So what mode are we in? We've been in essentially since the bottom of that late October, early November. We've been in sell vol mode, sell volatility, sell implied volatility, and as opposed to real volatility. So a lot of funds, a lot of especially momentum traders and a lot of even momentum funds have been, once the fear dropped out at the end of October, you can see a big down push. And that's where this massive, how many weeks have we been up now? We've been up all but like 3 weeks since the October lows. It's been selling volatility, selling implied volatility, and then essentially buying realized volatility and spread and capturing the spread between that. Because I'll give you an example. How in stocks people look at the implied volatility moves going into earnings. Like, oh, well, this is pricing in, like essentially if you're selling a straddle, it's pricing in a 20% move, or it's pricing in this move. So if I'm going to sell straddles, at the money straddles going into an earnings report on a specific stock, as long as it's, I'm harvesting the volatility or the vega, but as long as it's coming in less. So let's say I sell, hypothetically, the NVIDIA at a 20% implied volatility rate, or that's what the earnings are going to be for a one-day move later, and it only moves 12%, I can capture, that 8% spread, because it didn't move as much. I don't care which direction it moves. I just hope it doesn't move more than where I sold volatility. So the markets have, and a lot of these momentum funds and everything have been selling volatility based off key events. Key events can be earnings. Key events also could be like what we had yesterday, CPI. Volatility got pumped up going into the CPI. I mean, the VIX has been, you can somewhat see it on a slight upward channel. But the realized volatility, even though CPI came in hotter, it wasn't enough to say, okay, look, the move that I could sell volatility at was minimized, and then so I can unwind the volatility position. I can, especially with playing short-term options. I mean, look at the short-term options, the amount of options that have gone into 0-day and weeklies in the SPX. So I can play those, harvest volatility, and then the moment volatility starts coming in and I unwind my volatility position as volatility gets crushed, then what do I turn around and do? Well, the thing is to put it into momentum stocks. And it sort of becomes a self-fulfilling prophecy. That's why buying the dip, because also you get a pullback, which what precursors the pullback. I'm in momentum stocks, let's say, and I'm not referring to me personally, are the fund or the algos that are being run by me. And so momentum, like NVIDIA, keeps ramping up, start taking profits. It runs out of bids, people chase it a bit higher, then it dips. Well, also that dip can spike up not only in NVIDIA, but since NVIDIA is such a big part of the weighted cap of the market, you also can get a spike just in implied volatility across the board. Therefore, in all the buy the dip mentalities, you're also selling that higher implied volatility, using the implied volatility crush then to go back into more momentum stocks. And then you have the whole passive investing thing on top of that, because of the index is so cap correlated right now. So the VIX isn't really broken. It's just getting depressed now. You see it in a slight upwards channel now, which means to me, it's getting harder and harder to harvest the volatility. Why? Earnings are getting a little more, they got really sort of, the expectations got beat up. So it was like, even if a company missed, it didn't miss as much, or it beat really tamped down earnings. So that was easier to harvest fall. Other things like, okay, people don't expect the Fed to come out like next week and say, hey, we're going to take all rate cuts off the board. The Fed will keep doing stuff like, let's boil the frog a little longer. Let's say, yeah, we're still data dependent. Maybe it's showing a bit more inflation, so we have to be a little more patient, but cuts are still on the table. Well, that's not really going to do enough to spike volatility and cause a panic in the market. Now, if they came out and did say, hey, rate cuts are off for 2024, you'd see volatility spike. The people who sold volatility going into that meeting would then have to rush to cover. They'd take losses because, again, how are you selling volatility? You're generally doing it with leverage. I mean, options are leveraged. You're doing it in the options world, and then you're trying to harvest that when you're taking profits. You're rolling in those profits and using short-term options to juice the momentum stocks, so you have all this leverage going in, but if the trade goes against you, so you get either from a black swan event, which something the market is not expecting at all, which is very rare, but they can happen. That would be something like COVID was more of a black swan. Even so, some people sort of saw it coming. The volatility got spiked going into that. A true black swan event, which would nobody see coming, which, would be probably a very bad event, something that would spike volatility and would remain elevated for days, if not like a couple weeks or more. That can really crush the applied volatility harvesting trade and cause a lot of damage, because once you're taking losses in that and you're doing it through a leveraged instrument, you then also have to unwind your momentum plays. And so you can get depressed in both those and it can start taking losses. Also, in terms of harvesting stuff, momentum stocks, especially the mega cap ones, are starting to get harder and harder to harvest. Nvidia's still chugging up. I mean, today we had a down day, but yesterday was a huge rotation into Nvidia back from its couple-day pullback. Then we bounced yesterday as the implied volatility was being unwound. Tons of money rushed into, especially with options, tons of money rushed into Nvidia. But you start looking at Apple used to be a stronger momentum play. Since their last earnings, it's not generating much momentum. Meta still is a little, but it's starting to wane. Google, besides the last few days, has been getting harder and harder to go into from a momentum standpoint. So you're getting into like your Netflixes, your Meta's still holding up, your Nvidia's still holding up, but Amazon somewhat. But these momentum plays are getting harder and harder from a mega cap perspective. And if you really want to light the fire, because you start lighting the fire with the short-term options, and then it sucks in retail. Retail starts chasing it, enabling me to unwind my momentum play, causing eventually it to turn back down to pump up volatility again. Then it goes into the buy the dip scenario. So that's my long story short. I don't think the VIX is broken. It's just overly suppressed because right now, and we've seen it back. If you go to a weekly VIX chart, back especially this was a great strategy in late 19, early 20, before COVID hit. It was a fantastic strategy. After the major effects in COVID started on subsiding, 21 you got into sell the vol again, but it started to get out of favor once we rolled over, because volatility started spiking and wouldn't come back down as fast as needed, and there wasn't the pure momentum breakout plays which you see now. But I think it's going to get harder and harder, and either everything's pricing in this no landing or soft landing, or everything's still going to have Fed cuts. Inflation's creeping back up, and you're starting to see that with the stair step higher in the VIX. And at some point, I don't know what's going to trigger it, but the suppression, the sell implied vol will get taken off the table again, and then you'll start seeing the VIX really start elevating a little higher than it is now.
So it's basically staying in check because of that sell the vol trade that you described there.
Yes.
So it's not really a fear gauge right now.
It's not a fear gauge
by the media, right?
It's still going to, if major, especially, look, we've had 1 week corrections, not even every day of that week. But if you look at a weekly S&P chart, how many down weeks have we had? Since October, we've had 3, including last week. Really, that's nothing. We have not even had a multi-legged pullback. The last multi-legged pullback was from the end of July through the end of October lows. Now, that can also put a damper on it selling the vol, because you get the first leg pullback. All right. So if you're sitting in front of a chart tonight, go look at the S&P just from the end of July through the end of October. You had a leg down from the end of July to about middle of August, a little bounce up, but that bounce did not go to new short-term highs. You got then another leg down into the beginning of October, a 1 week bounce, and then the final leg down into the end of October. So it gave very little opportunity your volatility kept spiking up, and it gave very little opportunity to unravel a trade. So that trade was out of favor. But once everything came off the table, sort of at the end of October, And the market started chugging along, especially with the major reversal week going into the first week of November. You started to see volatility get absolutely crushed because, again, no fear in the market. Let's just sell vol and buy it all. And by buy it all, I really mean momentum.
So let me. I'm sorry, Jimmy. Let me throw a question in, and Jimmy, this might be as much to you as it is to Mike, because I don't want people who put questions to be discouraged from putting them in at any time. We have a question from I can't, unfortunately, I can't read the name because I don't read whatever language the name is written in. Max, can you put that question up? What about the bank term funding program, and what about local banks? Now, I'm not sure what this question means, but the bank term funding program was allowed to expire or end, right, Jimmy?
Yeah.
So,
I believe yesterday, correct?
Yeah, it was yesterday.
So there's two schools of thought, and I'll tell you what my school of thought is. Some said, well, if there was banks that had actual real stress, they would have lined up in the week before to take advantage of the the cheap money that the bank term lending program was coming out with. I don't believe that. I think that banks don't want to do it because they don't want the stigma, kind of like going to the discount window back in the day. And I also believe that regional banks who may be having, have that commercial real estate notes on their books, who are worried about them, know full well that the rapidity with which they opened that window a year ago will probably be repeated in a time of stress. So I still think there's a lot of stress in the regional banks. I think that stopping the bank term lending program is a big deal, but I think they'll start it up pretty quickly. Does that answer make sense to the question, you think?
It does. And Mikey, I don't know if you want to add to that, but this is the XLF that I put up, Spider Sector Financial. There is a better ETF for regional banks, but I don't remember what it is right now.
Right, because this one has a lot of the big banks, right?
Yeah. God, I can't remember what it is.
I'm not worried about them because they're just they're national entities now.
The KRE, you want the KRE, Bob.
KRE, that's what I want. So what I'm gonna say about that is it was scheduled to end. So a lot of the your legacy media was talking about it as if it was a surprise, and I think it was more of a surprise that they let it end on schedule.
Yeah.
Right. So this actually goes, Jimmy. We had a recorded show with Tom DeLongo yesterday that'll be out on Monday, and he said that he believes the banks had so much time to hedge, get out of loans, find funding. A great example is New York Community Bank had former Treasury Secretary Mnuchin raise $1 billion for them, which is a stopgap. They need more than that, but it was a good stopgap, and it kind of shored up the stock a little bit. Mike, do you see anything on this chart that bothers you in terms of the regional banks? Because I think that the stress has paused, but I don't think it's over.
The stress has definitely paused. I mean, if you start seeing this break back below $42, the stress is back. Other than that, it's still making higher highs and higher lows, stair stepping. There was a little mini double top, which hit the first target, has not been invalidated. But there's also a longer term double bottom, which has not been stopped out either. So right now, it's sort of in no man's land to me. Unless this pattern changes, and first warning sign will be if we break below 45.50. But then the real on the closing basis is right around, I'll tell you again, right around 42. 42, if you start closing below that, something's definitely changed with the regional banking.
All right, so put those two lines in case anybody wants to pay attention to that. Hopefully, a guy who wrote your name in a foreign language I can't read, that answers your question. What do you want up, Mikey? You want the S&P?
We'll start with the S&P.
I'm going to do SPY since this is more of a stock show, even though you won't.
Yeah, that's fine. Cover the spiders all the time.
Go.
I mean, even if you can see there how many weeks of pause. Can you put up a weekly?
Yeah, I'll put up a week. This is ridiculous, this chart.
It is ridiculous, but again, when you're in this mode, it can keep running until it doesn't. And I don't know what's going to stop it. But again, even on a pullback, see, what's fascinating is if you just take simple market analysis and look at the last major highs from January of 22, December, January 21, 22, that we've broken again above, and you look back and those becoming key support, that's back at what, about 480?
Yeah, it looks like it's about 476.64. Oh, you want the high is about 480.18.
Yeah. So if you look at that, even from the whole market concepts of that would be major support at this point. Could we pull back there at some point and still not destroy the major structure of the market? Yeah. Would people be uncomfortable with that pullback? Sure. But you could do that and still not destroy the structure of the market. So that's what I'm watching. And if you look at the Qs, I'm in the Qs. If you look at there on the weekly, the level's about 40, 405, 408, somewhere in there. Another thing, if you can pull up RSP.
Sure.
Oh, what's RXP?
RSP. RSP is the Invesco S&P 500 equal weight ETF.
Oh, yeah, I gotcha.
So remember, we've had the mega caps sort of leading, although what has happened recently in the past couple weeks, and this is one that's on my radar screen very significantly because that finally got above the January 22 highs. It's just hovering above those highs right now. But if that starts dipping back below, especially right around, I have a key line at about 163. If we start losing 163 and can't get a strong rotation back up, and then it eventually gives up 158, that would really be a warning sign for me, because that means the equal weight could not sustain the breakout. But until that happens, the equal weight has finally broken above the highs in the S&P 500. So, you're getting a slightly broader market participation that's traditionally been lagging because of the huge cap weights of the leaders, but it's at least catching up. Now it's got to prove itself, especially after we get some kind of pullback. It's got to prove that it can maintain this breakout level, because if it can't, that will put me seriously on guard that, okay, what's finally caught up couldn't sustain and could be starting to unravel to the downside. But until that happens, it's, hey, you can't just say, this is overdone, I'm going to sell it. The only thing is selling is volatility.
So you're looking at the equal weight as perhaps an indicator for the regular broad index to drag it down. Is that what you said?
Yes, because it was playing catch up,
right,
for a very long time. I mean, when the spiders broke above it broke above this January, right? December, January, it really took off. End of December, beginning of January. The equal weight didn't do it till last week.
Right.
Well, it's had to play catch up for nearly 3 months. If it can't sustain it, that's a big thing.
That makes sense to me. Okay. What do you want to move to now, Bobby?
I actually just want to really quick ask another question about this.
Sure.
Do you guys, and I can look at this and come back in a couple of weeks and say it myself. What does it say if the equal weight is outperforming? Which I can't remember a time seeing that, but honestly, I haven't looked for it either.
Well, now we're getting into, it's what I've sort of alluded to with the sell the volatility before. The mega caps are getting tired.
Yeah.
So it's not easy to harvest the momentum in the mega caps. I mean, you're just getting smaller and smaller and smaller. I mean, Tesla's out of there. Apple's dropping out where you can't harvest the momentum. As I said before, Meta, Google's getting to that questionable where you can't really harvest the momentum. You're getting to Meta, Netflix, which isn't really a mega cap, but you can still harvest momentum in it. What else? NVIDIA still, but if NVIDIA puts in a significant topping area. So what this is telling me, back to your question, is you're having to go elsewhere to really find, and this is the best start to momentum trading strategy, I think, the best start to a year ever for momentum.
Yeah, I put this up deliberately. I'm sorry, Mike. You can keep talking, but I put this up deliberately because we got another question. But go ahead, Mike. Finish your thought.
So that's why I'm watching, because the reason this is caught up is because you're having to find momentum in other areas, and if that starts waning too, you lose mega caps and you
Okay.
lose broad market momentum.
Okay, I get it.
It gets to there. Okay, what's going to take this thing higher, because you're running out of options to take it higher.
All right. So the reason I put this up is we have another question from a guy whose name I can't say. What do you think about the gap?
Name again, or because it's
There's the name in blue. You see it?
oh, another name. Okay, yes.
Yeah, I just can't read that. So what do you think about the upward gap in AMT3M, which is the Ameribor term 90-day rate? So I don't think anything of it, but because I don't ever think about it. But I don't know if either one of you guys have ever looked at this.
What is it? It's just, what's it
It's
based
traded
on?
at the CBOE. So I think if there's any hope of anyone having seen it, it's Mike. But I don't know I've never traded this. I've never looked at it. So I don't have an opinion.
Is it just regular 90-day treasuries, Mike?
I've never traded this either. So
yeah,
it looks like it's related to 90-day treasuries.
That's what I thought too, but I don't know if it actually is.
I mean, I honestly, like, if I stretch this out, I see kind of a little weak double bottom here, which is probably technically, this is a weekly, of course, technically correct, but going against the weekly rotation zone. So difficult to look for an entry on that. Although if you got to close above, looks like this level is 542, then you would go into the rotation zone. But how much are you getting out of this? Like, just
it also could be, if you're starting to get more and more inflation expectations coming into the market, you could see this thing start to run higher again.
I mean, here's the targets for it, Mikey. It's pretty, yeah. I think we're just kind of like, we're trying too hard to answer a question that I think it's fair to just say we have no idea.
Yeah, from a technical standpoint, right now, if you put a gun to my head, I'd rather be like I'm a half. If you guys have watched us before, -3 to +3, bearish to bullish, I'm a positive a half on this just because of that strength of the candle out of the breakout from the inside candle. But I don't even know what the hell it is.
Never traded it, never looked at it. So, Mike, anything last to say before I switch us to a chart we actually look at?
No, not at all.
That's it.
Thank you for the question, by the way. I wish we could answer.
Yeah, I hope we get more questions from you because you seem great. And I wish you could put your name in, I hate to say this because it sounds so shitty, but I mean in American letters so I can at least poorly
give you credit.
say your name.
Okay.
Mike, you want a weekly or a daily on this copper?
Let's start with daily, then we'll switch to a weekly.
So I will say this for you guys who follow me on Twitter, and this is not, oh no, I guess it is giving myself an attaboy pat on the back. But
you do that a lot. Just stick with your way of doing things.
But I talked about copper, so this is of keen interest to me. I'm very long it.
I mean, I've talked about this with you since forever.
Yeah.
And I was waiting for the key closing, and it's not changed since last year. 404 is the key closing, and we closed above that today. Now, in the short term before that, as I've talked about on a lot of things, webinars we've been on together, between the 50 and the 62% harmonic was a rollover sell zone. It spiked into that in December, spiked into it at the end of December, December 27th, 28th. We spiked into it January 31st, and then we formed this beautiful base right over the last few days, starting last week into this week, basing right at that 393, 394 area, chipping away at it. And then today it just exploded higher. And we got the follow-through close. We did not immediately get selling pressure. I'm still going to want to see this close above this on a weekly level. But I know what I'm watching tomorrow and Friday is make sure we still close above 404 because then the probabilities shift. The only negative on if you look, whether it be a daily or a weekly, is you have an upward sloping channel. We're getting into a key resistance area. So unless it really rolls over the next couple of days, I'd rather see it pause up here, and then the next targets would be 414 and 425 based off the harmonic levels. But if this can hold this level, this could turn into, hey, we could test some significantly higher copper prices over the next few weeks to a few months.
Yeah, I loved that pattern that was developing the last few days. That's what caught my attention. By the way, not that it matters to me, because you guys who watch us a lot, Bobby and I say we're 65% technical analysis, maybe 35% fundamental. I don't need a fundamental reason. I know what my fundamental reason is for copper too. It's electrification, it's grid shit. So was there a story today or no? Did anyone see one, or is it just a breakout?
I think I have an idea what it might be. I think it might be the push on yields, which we got the 10-year back up to 4.18, pushing the dollar lower. Okay. I think could be that. Tomorrow we've got PPI, which is likely to show strength. I haven't seen anything else.
Also, their Chinese announced their plans to cut their output.
Yeah.
Oh, okay. That might be something.
China announced their plans to cut their output, but this is what I love about technical analysis, because if you're watching stuff, you're actually going to start seeing the patterns unfold, and then the headline hits.
Makes sense.
Hey, my friend who's asking the questions. My friend who's asking questions. Can you put your name in? Type what your name would sound like, so next time I can say it. I'm sorry, that's just bugging me that I can't read your name.
Because we want to give you credit. Yeah.
Yeah. So no, I think that has a lot to do with it. China, by the way, has announced a bunch of stimulus plans. Most of them have underwhelmed the market. So the fact that they're going to cut, it's really smelting, right? So they're one of the biggest producers of copper as a smelted product. They're one of the biggest purchasers of copper. So they're going to be putting less finished copper into the market. So in theory, that brings about more demand for the raw ore.
That's interesting. All right, I'm in it. You guys know, you guys have been following me for a year and a half. Gave a speech on it a year and a half ago. For the next 5 years, I wanted to be long copper, and I am, and I'm planning on that. That's a big deal. I think that we're not moving away from the electric stuff, even though this chart is in the face of China, which seemed on the precipice of an economic cataclysm even 3-4 months ago. It's even though EVs proved to lose their luster somehow in the U.S. market, and copper still keeps chugging along. I think it's fascinating, and to me, that's a signal of strength.
I'm going to put up NVIDIA if you guys don't care.
Yeah, sure.
You go with that, Mike?
Yeah, I do.
By the way, Mike covers all this stuff every single day on the Path Trading Partners YouTube channel. He also has done some stuff with some private companies that have put him on their shows as well that I really shouldn't speak about here. But every single day on the Path Trading Partners YouTube channel, Mike covers this stuff live. So, all right, NVIDIA daily. Been a little bit of if you can call this weakness, right? I hesitate to call it weakness.
It finally had a pullback into the rotation zone.
Yeah.
But yesterday it lit up again with the volatility coming down and immediately stuff pouring into NVIDIA. What am I watching in the short term? I need a close below above 924.37. That will shift the probabilities of retesting the highs from last Friday. We'll shift the probabilities from retesting that, and we'll still have maintained the rotation back up. So that's what's really key. If this thing does, I'm still expecting it to, as long as it does close above that 924.37, before it really peters out, I think it's going to make a run closer to that 1,000 mark. There's a lot of option stuff up there going on. Now, that there's no guarantee, but we're getting to cycle bottoms, and it's trying to push higher, holding the rotation zone. Although if this thing now cannot close above 924.37 and then closes back below 841, that would be the breakdown of the final major momentum stock from a mega cap perspective. So that would be
that level one more time, Mike.
The upside level I'm watching for a close and this would preferably be a weekly close above 924.37. But if that does not happen, and then we get a close back below 841, 841.66 to be exact, then that will have broken the momentum pattern, and the mega cap, pretty much across the board, the mega cap momentum will be breaking down.
Okay, that's what I'm more interested in right now because I want to know when to get out. I've got out of 2/3 of my position in that. And again, I don't make recommendations in NVIDIA. I just had it myself.
But we can't write this off just yet because it's definitely waning momentum. However, there could still be at least one final leg push higher that I'm watching for. Again, the probabilities haven't shifted yet to that, but that's what I'm watching for.
Yeah, it looks like those symbols from that guy who's asking questions translates into Imperial Palace. I just put it in the Google Translate. Yeah,
this is really bugging. I love when something, because Bobby's a little obsessive compulsive. So when something grabs him, he just can't let it go, which I find very amusing.
So thank you for your questions, Imperial Palace, depending on how accurate Google is. It's funny with NVIDIA. NVIDIA to me it's the best example of what's 2000 like in this market. And it's also the worst example of what's 2000 like because NVIDIA is no pets.com. Right?
No, they make shit tons of money.
I mean, they have a product in demand, they have earnings, they have profits, they have big profits. But I still think that like the AI boom, much like everything else, is being overpriced. It's being overrated. So I had 3 lines on this chart before, and I'm going to just put these back. These are Mike's levels. So for anybody who wants, take a screenshot of this or go back to the live. These are Mike's levels. This is what he's waiting for a close above. This is where he thinks it breaks down a little bit. And this is where he thinks the next run is going to take us. Okay. But if I just do this where I hit that sort of reverse thing. All right. I've been looking for, actually, let me go back one more. Let me put this back. I want a chance to buy NVIDIA right about here, right about 833 or so. Because while we had one pull into the rotation zone, a really good one, right? And we have another one here. I'd like to see that one that kind of goes down to what would be the closest thing I have to a significant level on this chart. Very difficult to find one when there's literally no past price action to line it up to, right? But I really like this rotation level and then this gap up here getting filled right around here somewhere, which it hasn't been filled. And then I'd like to put on like a 2 or 3 year position at that point, knowing full well that at some point in say the next, I don't know, 3 years, we're going to test that 200-day moving average, but it's probably getting closer to about 750, 760 when we do that. So over time, this 200 is going to pull up. And again, I have no basis for that, but I think it's going to be somewhere in here. The 200 is going to be somewhere up here when we actually get a pull and a test of it. And that won't bother me so much for my buy here. I bought NVIDIA and sold it too quickly because let me rephrase that. I sold it where I was supposed to sell it. Okay, because I had a target on it and I did what I planned on doing at that target. I think if I got in it again, my target would be more of a trailing stop move rather than an exit on NVIDIA, because until the day comes that someone is announced to say that they have a competing chip that may be better and it's ready for shipment for AI, it's going to be difficult to catch NVIDIA.
Can I add something real quick?
Yeah.
Mike mentioned the 1,000 level, and he alluded to the fact that there's options activity. If you guys followed us for a long time, particularly in interest rate products, I always talk about the psychological levels, and they're not. It's not just some sort of voodoo. It's a lot of options get written at big round numbers, because if it's a play from a couple months ago and you're buying a leap, or if you're picking something out in rates, you're not going to say, I think rates are going to 4.96. You're just going to say, I think rates are going to 5. So those are the options you do. There's more liquidity at that level, and there's probably a crap ton of open interest options at 1,000. Am I right in assuming that, Mike?
Mm-hmm.
Okay. Mm-hmm. That's a short answer.
That's
okay.
No, that's literally the option major price magnet. So it doesn't mean it has to get there.
No.
Remember, it doesn't have to hit 1,000 exactly. It could stall out at 997.28. I mean, Who knows?
But it makes it a level of interest. It makes it.
It makes it a level of interest. And Bob, you mentioned, yeah, there was a lot of stuff at pets.com from the 2000s, but this doesn't remind me of a stock like that, as for reasons you've pointed out. This reminds me so much of Cisco because.
Interesting.
And I'll tell you why. Mm-hmm. Right now, we're in the AI. Everything's going to be AI. Everybody needs their AI chips or their AI cloud services. AI. It's going to take over everything. You know what? Cisco was that back in the .com. It was Cisco's going to rule the world because the internet and everybody needs a router. Everything needs to be routed over the internet. Internet's not going away, and it didn't go away. You know what? But everybody didn't need Cisco. You got other companies caught up with Cisco, and Cisco was way overblown. I'm not saying that this can't go higher. I'm saying watch, because that's the thing. Cisco ran up and up and up and up and up because everything needed routers, but then things still needed routers, but not to the level that Cisco was priced at, and the competition caught up to Cisco a lot, like Juniper caught up to Cisco a lot faster than people thought. So it really leveled the playing field, and Cisco was just so overblown. I think this could be very similar with NVIDIA. Would I be shorting NVIDIA at this point? Not at all, because I think that's, you know what, unless you really have just some gambling money to say, hey, I'm going to just take some gamble. Now, if there's a major topping pattern that triggers, I'd be willing to look at that, especially with options from, for a pullback, because things can get extended from a pullback. When you get vertical up, you can also go vertical down, even with good, solid companies.
And I'm going to add something to there too. Bulls can make money, bears can make money, pigs get slaughtered. We always say that in the trading field. If you didn't lighten up on that run up there, I mean, you get what you get. I'm sorry. You need to be smart. Like I've sold, like I said, 2/3 of my NVIDIA position, and I'm glad I have a small position now. And I'm glad I have a small position now. Made good money, was a good trade. But don't try to buy the beach house with every trade. You agree with that, guys, right?
Oh, yeah. I think that's very smart. That's why we identify targets on the way up, because a target can be a place you either take something off the table or at least raise a trailing stop.
Exactly.
So that way you're constantly removing, whether you're selling some of it or raising a stop, you're at least taking some profits or reducing your risk. And it can hit multiple targets, and you keep doing that. And you can leave some on because you're never going to sell the absolute high. Just like you're never going to buy unless you get incredibly lucky. But even if you sell the absolute high day, you probably still didn't sell the absolute high tick.
Yeah. And this is an important point. Like, this is obviously a monthly chart, but imagine it was a daily or a weekly, right? And you're running up. And let's say your target was somewhere in here on Cisco. This is Cisco from 1999, right? And let's say you decided, you know what? I really think that everyone needs routers. They all got to go through the internet. It's all got to be routed. This is going up forever. On this particular target, as Mike said, you wouldn't exit. You would just move a stop. And then your next target, you'd move another stop. And then maybe your next target, you move another stop. And then maybe you entered somewhere in here on the breakout, right? And you get stopped out somewhere in here. It's still a large gain. Now, again, this is not going to be representative of what probably happened to people. But if this was like this hypothetical example, that's 158% gain. That's an example on this chart versus selling the top, which nobody ever does, and is 342%. At least it's not a loss. And everybody sits around, and I think you two will agree with me on this. I've known more traders that have been more upset, right, about money they theoretically thought they left on the table than losses. Guys will lose money in a trade, be like, I just got run over on that one. Be like, I only made 100%. I could have made 2. What are you, an idiot? I mean, it's wonderful. Jimmy, you've done it.
Oh, no, not about it. That's why I'm laughing. I do it all.
That's the thing. Guys get more, as if they had a perfect plan for a trade to make money, but somehow they should have known differently than the plan that actually worked. And if you look, by the way, this is a little unjustly, it's not a really good representation, but it's a really good representation of what Mike's talking about. where this was Cisco and then it collapsed. And then you might look at this and say, this is dead money for, however much time. Let me see how much time this is approximately, till it started to really ramp up again. You're talking about 196 months, if anybody wants to tell me how many years that is, where it was just kind of sideways, but it's sideways in like a 300% range. So even that's not dead money. So we don't want to overstate the point that like you need to exit here or that you just have no chance of making money back. But for the people who bought up here, this was dead money for 196 months. Whatever, was that 8 years?
Something that we should mention when we look at this too. If you are a human, and you'll be able to tell just by looking, I think you probably are if you're listening to this, you are hardwired to be a bad investor and a bad trader because everybody likes to buy when everybody else is buying and everybody likes to sell when everyone else is selling. So it is only in fighting those impulses that you can actually make money. I mean, right. Yeah. So
anyone do the 196 month math? I'm doing it right now. It's
I said 16 years, right?
I didn't hear you say it. So yeah, it's about 16 years.
Hey, remember who you're talking to here.
Sorry about that.
And if
my apologies.
As I've said before, Bob, I still know people who are holding for break even in Cisco.
Oh, that's right. You have said that.
I have said that, and they've been in it since 99.
Do we have time for gold and or Bitcoin?
We do.
Yeah. I mean, I know we're bumping up against time soon, but
hang on. Let me put up let's go Bitcoin.
Sure.
And I got to get out of the monthly here. This is a Bitcoin futures because it's the easiest one to pull up.
Sure.
Daily, Mike.
Daily Bitcoin.
I don't want a tax. Yeah. I don't want a tax event, but what do we do?
Bitcoin's lately been the momentum trade higher. It's broken out. That's about the major thing that's still doing momentum, especially with all the ETF launches. Next key target area higher I have is 75,600 to 76,400 in that range. The only thing that shifts something in the short term is a close below about 68,400. That's the key thing. Other than that, there is no topping pattern yet. Doesn't mean there won't be one that develops, but there's nothing yet. So you got to keep trading with the trend until either a topping pattern on a larger basis sets up and then triggers, because you can see them set up, but they don't trigger, or we get some kind of adverse effect. The little thing that will make me sit up and take notice in the short term is a close, especially on a weekly basis, that's below 68.4. Until that happens, and that will make me sit up and take notice. That does not mean that the absolute top is in yet, but that will, hey, I got to look a little deeper to see if there's any other unfolding patterns.
Right. The trend is your friend.
If this, I don't know if this is going to work. No, it's not going to work. I really want to look at the 10-year yield, but I can't remember the symbol here.
The micro?
The micro?
Yeah.
Micro will do it.
The micro yield,
there it is.
You got it?
Bingo.
Yeah. So this is the 10-year yield. What do you see here? I like this level here. I like a potential breakout above it if it happens.
Just tell me what the level is there.
420 probably.
Yeah, it's about 4. Yeah, it's 418, 420.
Yeah, I'm watching for a key close right now. Today we closed above 417, which was my first warning sign. We're at least getting back to. We've at least put in a possible short-term bottom, especially since we pulled back between the 50 and the 62.5% harmonic. The real level that I will get excited about, hey, we can easily go test the 4.4 level, is if we start closing above 4.21.
Got it.
Because that will
there, Bobby, for other assets are if we hike the 10-year up to 4.4. Is there?
Well, I think that, so part of the reason I'm looking at this now is, again, because of the conversation we had with Tom DeLongo, where he said he thinks that the Fed is fighting Yellen, right? in terms of what they want the back end to do. So, and there have been some Federal Reserve governors and presidents who have said that quantitative tightening, I should say, will continue regardless of rates, and they're almost unrelated at this point.
Yeah.
He
thought a steeper curve. He thought lower rates on the short end, longer rates, because the Fed. That's
what everybody wants, a steeper curve.
Keep it back on, because I made good money on that trade, and the only reason it came off is because I forgot to roll it into the next month, because those micro contracts roll every month. That's always
I definitely think the steeper curve is coming by hook or crook. And again, the reason I say that, I believe the Fed will cut rates. I just don't believe they should. Right. And the balance there is going to be less rate cuts than people expect. Can I put up gold?
Sure, of course.
And then we're running out of time. So gold daily, Mike.
Gold daily. Gold daily is, we broke above the highs from December 4th and Tuesday, actually. So yesterday, we actually came back to test that very key breakout level, and now we've rotated back up. So watching to see, make sure this rotation holds and doesn't make a little mini double top up here that would then be required to trigger. But if we do sit and close back below about 2150, we could then have a slightly bigger pullback, especially closer to about the 2100 level. That would be the only negative in the short term. Other than that, all things have been firing for gold. Gold made a very long higher base from, the beginning of December until the end of February, then broke out on major momentum and is now holding above that key high from Monday, December 4th. So that's virtually the level that was tested with the lows yesterday. So as long as that really holds up in the short term, we could make some kind of base up here to propel for the next leg higher. If we do break below that 2150 on a closing basis, we might have to pull back a little more, but it does not destroy the long-term. I've had a long-term buy signals on gold since last October. So, and we've been constantly stair-stepping higher, and this does nothing. There's nothing that can virtually happen in the short term that would invalidate that, unless something caused gold to close below 1965, which I don't know what that would be in the short term.
That makes sense. Okay, good. All right, let's wrap it.
I just want to throw out real quick that I've been talking about gold since the end of 2023. I said it was my trade for 2023. It's now still one of my trades for 2024. And it was in my market forward look at the end of 2022. And I made a call of gold 2,800 before the end of 2024. But now I'm pushing it to 2025, and I'm just going to keep pushing it until it gets there. And then I'm going to pat myself on the back. Because that's what analysts do. That's what they do.
Damn right.
Just keep adjusting your price target. My price target for this year is, hang on a second, it closed today at 2181 is my new target. I'm just going to keep moving it.
All right. That sounds perfect. Thank you guys for joining us. It's been Tradiers, the Trader's Edge. Sorry, I blanked for there. It's been a long day. That's Mike Arnold, Chief Technician, Chief Strategist for Path Trading Partners. That's Bob Iacchino. We appreciate it. This only works if you guys tune in, and thanks for all the feedback.
Thanks, Anissa. Thanks, Imperial Palace.
It's not his name.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy. and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.